Jen.
No change. The Federal Reserve holding rates steady in the current range of 5 to 5.25%, but raising interest rate projections to a new peak of 5.6%, implying at least one more rate hike from here, or about 37 basis points more of upside. Now, if we look into next year, officials projecting 100 basis points in rate cuts to around 4.6%, though that is higher than what was previously projected, around 4.3, meaning that officials are going to hike rates higher and hold them higher for longer. Now, 9 officials see raising rates to that 5.6 level, while 3 officials saw raising rates as high as closer to 6%. In its statement, the Fed justified its pause today, saying, quote, holding the target range steady at this meeting allows the committee to assess additional information and its implications for monetary policy. However, officials did maintain language from the previous statement to leave the door open for further rate hikes, saying that in determining the extent to which, quote, additional policy firming may be appropriate, the committee will take into account the cumulative effects of monetary policy, the lags with which monetary policy affects economic activity and inflation. Now, officials still view inflation as elevated. In fact, their projection for inflation for the end of this year is now closer to 4%, 3.9%, which is higher than previously forecast at 3.6%. Unemployment now seeing rising only to 4.1% from 4.5% previously. And economic growth was also upgraded to about 1% versus 0.4% before. This decision, unanimous. Back to you.
Jen, really interesting here as I look through the context of this, but I think that the summary of economic projections, also known as the dot plot, is indeed going to get a lot of attention. So just wanted to zero on that. You did mention here that the Fed is effectively saying, yes, it's pausing now, but because it's raising its forecast for where rates will be at the end of the year, that definitely does imply we could see more rate increases after this month.
Yes, exactly, Julie. The fact that we're seeing 5.6% implies that there's more than a quarter point rise here that officials are projecting. That's like a little bit like 0.125 over that 25 basis points. So again, about 37 basis points of upside here. But, you know, they're leaving the door open here, and inflation remains highly elevated, well above the Fed's 2% inflation target, clocked in on the CPI latest at 5.3%. So we'll hear from Fed Chair Powell here in less than 30 minutes about whether, you know, that is their projection for now. And depending how sticky inflation is going to be, the fact that they now see it ending the year at close to 4%, I really think speaks volumes here.
Yeah, so interesting here because, you know, as you said, there are some market participants here who are still looking for a cut in rates. Thanks so much to our Jennifer Schonberger down there in D.C. covering this breaking news.